Hello, good morning. Today our guest is Vladimir Popov. Hello, Vladimir. How are you doing?
I'm fine, thank you. How are you?
I'm great, and it is my first time speaking to a Russian academic. Vladimir, why is
Mhm.
Russia special? We're all interested in Russia. Is Russia a country that's really deficient in trust?
Well, Russia is special, like every country, because of many reasons. But I guess the greatest Russian contribution to the world development is the idea of social justice, socialism, and communism. And of course, there are those people who support it, those people who don't support it. But this is the original idea, and I would argue that maybe it was first realized in Russia in a perverse form, but this idea is going to continue.
All right then. And Vladimir, what's your position on left-leaning economic movements like socialism and communism?
I think basically I can describe myself as a social democrat in the European sense of the word. Yes, I'm generally sympathetic to the ideas of communism and socialism. And I think it should be democratic socialism. But I think this is where the world is moving. Today, the major conflict in the world is between the Western liberal model and the model which I call the East Asian model. The East Asian model is best described in the terms of Asian values. Asian values is the primacy of the interests of the collective over the interests of the individual. So once you stick to the primacy of the interests of the collective, then it is the East Asian model, the model of Asian values. And the most important indicator to make the distinction between the economic models, which are Asian values or liberal models, is the income inequalities. And I would argue that income inequalities in East Asia and in China are pretty low. You would say it's high, but if you control for the size of the country and for the level of development, it is pretty low. And this is exactly what distinguishes the East Asian model from the Western liberal model. And of course, the notion of human rights. I don't know to what extent you want to go deeper into it, but for instance, if you take Chinese policy of one child in a family, now this policy is abolished, but for nearly 40 years, it was the policy in China, extremely popular policy in China, supported by the majority of the population. From the Western point of view, it would be considered as a gross violation of human rights, reproductive rights. But from the point of view of Asian values, it is normal to limit the fertility for the sake of the general benefit. If the general benefits are greater than costs, this is normal to impose some limits on human rights. So there is nothing like unalienable human rights. The human rights can be limited, and I guess most economists would agree that this policy of one child in a family contributed greatly to the Chinese economic development. Probably Chinese economic miracle wouldn't be possible without some limits on the growth of population. Why? Because the savings and investment are not infinite. And if savings and investment go to create the jobs for the new entrants into the labor force, then you don't have enough investment to increase capital labor ratio. This is, economics 101, solo model, and it is pretty well known that the growth rates of GDP per capita are linked negatively to the growth rates of population. If your population does not grow very fast, then all investment contribute to the increase in capital labor ratio, and this contributes to the increase in productivity. So the Chinese economic miracle definitely is partly, at least, based on the limits on the growth rates of population. So this is the long answer to the short question. The question is pretty big. So these are the two models which compete today, and I think the future is. Given the climate change, given income inequalities in the world, given the depletion of resources, the future is with the models like East Asian model, which put the interests of the community, the interests of the country, ahead of the interests of individuals.
Brilliant response, Vladimir. So I am a libertarian, but I do favor the Russians in a sense. Westerners like to talk about liberal values and libertarianism, but Western liberalism is morphing into a very strange form of authoritarianism, especially with the advent of identity politics. In the Western democracy today, Vladimir, the majority can vote to take away the rights of the minority. There are companies and universities refusing to employ people on the basis of race because there's a preference for women and minority groups, and the Russians and the Chinese are not going to accommodate that outlook. So this is one way in which the Russian and the Chinese models are superior to the Western model in terms of its respect for some form of human rights. China and Russia are not infiltrated by identity politics.
Well, this may be partly true, but I wouldn't like to take the view that I will make a distinction between Russia and China. I am
Yes.
really a big fan of the Chinese model, and the Russian model today is basically the Western model. Russia, my general view is that all countries had the Asian values and had the community-based economic model before the 16th century, before the beginning of the enclosure policy in Britain, before the Industrial Revolution, before the division of the world into rich Western countries and poor developing countries. So before that, community interests were basically superior to all the individual interests. And the income inequalities were low. We have the data on income inequalities in the Roman Empire, in Byzantine, in Britain before 1500. The income inequalities were low at that time. And it's understandable because once your GDP per capita and your personal income is low, once you allow income inequalities, half of your population is going to die out. And this is exactly what happened in Britain with the enclosure policy in the 16th, 17th, and 18th century. Life expectancy at that time in Britain went down from 40 years to 35 years. One of the major mortality crises in the history of humanity, second mortality crisis to be more precise, which was not associated with external shocks, with shocks like tsunamis, earthquakes, pandemics like the one we have today. So this was the situation before the 16th century, and then the rich countries, or countries which we call rich today, the Western countries, they made a focus on guaranteeing human rights, individual freedoms, and entrepreneurship, and they started to grow very fast. And we can talk about why they started to grow fast, but the fact is that by 1900, the ratio of GDP per capita in countries which were now called Western countries to the GDP per capita in the part of the world which is the world periphery, or the countries which were now called developing countries, was 6-1. And today it is also 6-1. If in developed countries, in today's dollars, it would be $50,000 to $70,000 per capita. So in developing countries, it would be something like $15,000, $10,000, $15,000. So this gap persists. Now, China continued after the West got rich and started to develop faster. After the West started to develop faster and started to get rich, better to put it this way, there were two groups of developing countries. One group of developing countries stayed on the same track on which they were before, with the traditional values, with the community, with the primacy of the interests of the collective, and with low income inequalities. These countries did not develop. This is East Asia, Middle East and North Africa, and maybe India. These countries did not develop until the 20th century, until 1950, if we look at China. China is the prime example. The other countries were the countries of Latin America and, say, former Soviet Union, the Russian Empire, and these countries westernized. Sub-Saharan Africa also westernized, either because they were colonies or because they wanted to catch up with the West, and they just adopted the same model as the West adopted. And once they did it, they had very high income inequalities, and they had all the costs which are going together with high income inequalities, like the polarization of the society, crime rate, a high shadow economy, poor institutions, because polarization of the society undermines the institutional capacity of the state But they also had the increase in the savings rate. So they started to develop. Latin America started to develop faster than, say, East Asia. And it was not catching up, but at least it was not falling behind the Western countries. So Russian Empire and Latin America were developing pretty much at the same pace. They just started later, but pretty much at the same pace as Western countries. So the gap between them continued, but the gap between the West and East Asia increased. And it increased until 1950. And somehow in 1950, these countries started to grow like crazy. And there are 5 cases of countries which were previously developing and became developed. This is Japan, South Korea, Taiwan, Hong Kong, and Singapore. Well, Taiwan is a province of China, Hong Kong and Singapore are just cities, but South Korea and Japan are, full-fledged countries. And these countries had the GDP per capita of something like 20% of the US level in 1950, after the Second World War. And in 1970, or in 1980, in case of South Korea, they were developed countries already. These are the only countries which were developing and became developed in the 20th century. And there is one example of a country which was developed and became developing. This is Argentina. Argentina in 1900 was the developed country. It had the GDP per capita of something like up to 90% of the United States. And then it fell out of the club of rich countries and it became developing country. Anyway, these 2 groups of developing countries, one that betted on Westernization and the other that stayed on the traditional track of the collectivist values and low income inequalities, these 2 groups of developing countries are represented by Russia and China. So I would say that the story of Russia and China are very different. In China, just to complete the thought, in China, there was a period of Westernization from the Opium Wars, which was the middle of the 19th century, 1840s, 1850s, to 1949. In 1949, the communists took power. Mao Zedong created People's Republic of China, and they returned the country to the previous track of low income inequalities and traditional values. And it turned out that this collectivist model, given the level of development that increased a little bit from 1500 to 1950, produced miracles. And it became much more competitive and successful than the Latin American model. So Latin America and Russia were doing better from, say, 1500 to 1950. But after 1950, they were doing better than China and East Asia. But after 1950, those countries, East Asian model, they stayed at the low start. They were falling behind and they did not start their development until 1950. But when they started the development, they started to grow as crazy. And now they're doing way better than Latin America and Russia. And now we're seeing the story of convergence. Previously, the story was divergence. From 1500 to 1950, developing countries were falling behind. And today, we're seeing the story of convergence. One group of developing countries, East Asian countries, and I would argue it's also in future MENA countries. MENA means Middle East and North Africa. And India, those countries will be catching up. And eventually, everyone will catch up. I think eventually, all the countries will become one. But this is not going to happen right away. And first countries to catch up with the West would be East Asian countries like Japan, like South Korea, like ASEAN countries, and like China today.
All right, Vladimir, I really love that analysis. It was like a story. At one point, I just wanted to listen to you, to give a lecture, but fortunately, after I posed some new questions, Vladimir, East Asian countries, what do they owe to their institutional history?
Well, it's like, they owe everything, I would say. I mean,
You have
if
a
we talk
paper,
about
hold
economic
on,
growth.
Vladimir, you actually have a paper on the topic.
Yeah, I would say that, East Asian countries maintain strong institutions today. What are institutions? I define them, people define them differently. But if we talk about state institutions, I would define them as the state ability to enforce rules and regulations. Now, you may agree with rules and regulations. You may not agree. You may agree with the tax system. You may not agree with the tax system. But the question is whether it is enforced or not, whether you have a shadow economy or businesses that do not pay taxes, or you don't have the shadow economy, or whether you enforce your monopoly on violence, for instance. You know, the famous definition of the state, Max Weber, is the monopoly on violence. The state can kill people and put people into jail if they break the laws, but nobody else can do it. So the good indicator, I look at two indicators. When I talk about state institutional capacity, I look at two indicators. One is the share of shadow economy, and the other is the murder rate. It can be the crime rate, but crime rate, and there are papers about it, crime rate is registered differently. You know, there are different crimes, and some crimes are reported, not reported. So in developed countries, generally, you report more crimes than you report in developing countries. In developing countries, many crimes go unreported. But if you look at the murder rate, this is grave crimes, and murders are generally reported everywhere. And unless you have the case of a civil war or the period of warlordism in a country, then there is no statistics, even there is no statistics. But once we have statistics, we know that in Europe, for instance, murders today is 2 people per 100,000 of inhabitants. In the United States, it's 6 people. It increased a little bit during this pandemic. I think it's 6 to 7 already people. It used to be 5 people per 100,000 of inhabitants. In China today, it's 1 person per 100,000 of inhabitants. In Japan, 1 person per 100,000 of inhabitants. In East Asian countries, generally, with the exception of Philippines, which sometimes is not considered to be East Asian country, the murder rate is about 1 to persons per 100,000 inhabitants. In India, I think it's 3-4 per 100,000 inhabitants. In Middle East and North Africa, in countries like Iran, Turkey, Egypt, Arab countries, it is also 1, 2, 3 persons per 100,000 inhabitants. However, in Africa, sub-Saharan Africa, yes, it is something like 10, 20, 30. In Latin America, 10, 20, 30. In the Soviet Union, it was in 1960s at the lowest level, it was something like 6 to 7. Then it increased to 10, then it fell to 6 to 7. But in Russia, in 1990s, when there was a transition to capitalism, it went up to 32. So it became like a Latin American country. The highest rate is in South Africa and in Colombia. In Colombia, it was, maybe now it's lower, but it used to be 60 or 70. When it is 60 or 70, this is already the border of the disappearance of the state. There's no state because there is no monopoly on violence. There is a period of warlordism. After 60 and 70, statistics stops and states fall apart. And it's not really a full-fledged state. It's, I don't know what it is in Libya today, but in Syria, in Iraq, but it may be close to those numbers. So if you look at the institutional capacity measured by the shadow economy and the murder rate, East Asian countries, China, looks very much like a developed country today, like Europe. The crime rate, the murder rate is 1 to 3 in China, and the shadow economy is 20%, pretty much like in many European countries. In other developing countries, in sub-Saharan Africa, even in Russia, in Latin America today, and even in Russia today, it is something like 50%. The shadow economy. So it's huge, yes? So there is a huge sector which is not paying taxes, which is not really controlled by the government. So the state institutional capacity is a precious heritage of the East Asian model and precious heritage of the Soviet Union, I would say, because in China, the period of Westernization lasted only 100 years, from the Opium Wars to 1949. But in Russia, it lasted at least for 300 years, from 17th century, at least, from the Second Russian dynasty, Romanov's dynasty, which was established in 1613. So from that time, Russia was westernizing. The third Tsar of Romanov dynasty was Peter the Great, that was really westernizing Russia. And this westernization, of course, led to the contributed to undermining of the institutions. So the institutions, because of polarization, because this westernization means income inequalities, and income inequalities, they create polarization. Polarization creates murders and crimes, and institutions weaken. And yes, polarization and income inequalities, they create an increase in savings rate, but the cost for the increase in savings rate and investment rate is very high. As I said, in Britain, during the enclosure policy, there was a decline in life expectancy and so on, and an increase in murder rate and crime rate and so on. So if we return to the East Asian countries, their institutional history was interrupted for a short period of time. In case of China, it was interrupted for 100 years, from 1840s, Opium Wars, to 1949. But then they returned to the previous trajectory of development because of the Chinese communists. They returned the country to low income inequalities. And they created this social justice and fairness, despite all the great leap forwards, despite all the cultural revolutions, despite all the bad things and repressions that we had in China. The fact is that income inequalities were low and life expectancy increased dramatically. In China and India, in 1947, when India became independent, and in 1949, when China became communist, life expectancy was the same, 35 years, only 35 years. In India, in 1976, it increased to 52 years only. In China, it was 65 years when Mao Zedong died. Mao Zedong took the country in 1949 with life expectancy of 35 years, and he died, left the country with life expectancy of 65 years. Today in China, it's 70, nearly 78, because during pandemics, life expectancy in China increased, and in the United States it fell. So they say this year, 2021, life expectancy in China would be even higher than in the United States. So today it increased even more. But the fact is that China, for its level of economic development, had very high life expectancy in 1976, before the economic reforms in China started. So the story of the institutional continuity in East Asian countries, this story is something that allowed to avoid all the costs of the transition to capitalism, which happened during the reforms of Deng Xiaoping in 1979. When there was a Westernization in 1840s, China lost the Opium Wars. China opened up. There was a complete globalization. Opium was sold in China freely because of the demands of the British that won the Opium Wars. So after this Westernization, Chinese population did not grow for about 70 years. This was just about the worst history in Chinese, the worst period, in Chinese history. Chinese population in 1840 was 400 million, and Chinese population, then it went down because of Taiping Rebellion, because of Boxer's Rebellion, excuse me. And in 1911, when Sun Yat-sen, when the Chinese emperor abdicated and Sun Yat-sen created the republic, it was about the same, 400 million. Yes, there were periods in China when the population was going up and down, but this period of 70 years was pretty unique, when the population was not increasing, and this was the result of this Westernization. But then China returned to the previous track and started to grow faster than other countries and started to increase life expectancy faster. So this was the East Asian model, and it was successful. And sinologists say that China is special in Chinese culture is special in three respects. This is the last thing I'm going to say. Chinese institutions are due to the fact that China stayed on track with the collectivist model, right? So this collectivist model was the same as the collectivist model in all countries before the 16th century. And this collectivist model also existed, community existed in India after 16th century, in Middle East and North African countries. But China, I think, is the extreme case of the collectivist model. Why? Because there is an extreme continuity in China, which you don't find in other countries. Sinologists say that China is special in three respects. The first one is characters. Most countries started with characters, but most of them switched to alphabets, and it's only China that stayed with characters. And this is the special way of understanding and thinking. And the second one is the amount of ancient texts. Confucius, which is the 4th, 5th century before our era, he only has rewritten those texts, but this text existed even before Confucius. And these texts, the sinologists say that amount of ancient texts, which come from several thousand years ago, this amount of the volume of this ancient texts is higher than in any other country by the order of magnitude. And it is not uncommon for the Chinese, even not very educated Chinese, to talk about Liu Bei and Zhuge Liang, which are the heroes of the Sun God, Three Kingdoms, one of the classical novels of the Chinese literature. And this classical novel was written, I think, in the 14th century or sometime later. But the period which is described is the 3rd century of our era, the war between the three kingdoms. And everyone knows these heroes, which are the real historical people. And Chinese live with this understanding that their history continues. This is the longest institutional history, the longest institutional story, which was never interrupted. Chinese culture was never interrupted. You can think about, Greece, ancient Greece, and Rome, and Arab Caliphate, and Byzantine, but all these countries were defeated in wars, and yes, they managed to transfer their achievements to the other cultures, to the other nations, thanks God. But those cultures disappeared themselves. In China, this continuity was never broken. This 100 years of Westernization was only a deviation from the trend. In Russia, there was 300 years of Westernization, and Bolsheviks tried to return the country to the collectivist model, but it seems like they did not succeed, because now, when Russia moved to capitalism, it seems like it has all the costs of the Westernization model, like Latin America. Russia can be compared to Latin America. So the third feature of the Chinese culture is the respect to the elderly, which is the common feature of all traditional cultures. But in China, it's not even respect. It's not only respect. It is the connection to the ancestors, this connection to the ancestors. So all the three features that I mentioned can be united with one word: continuity. And this is not exactly my area. I just retell what sinologists say. Sorry for being long, but yes, to summarize, institutional continuity is the crucial feature of the East Asian model, of the traditional model. And it seems like this institutional continuity does not allow income inequalities to grow. And yes, it may be that countries do not increase savings rate right away. But when slow growth of productivity allows them to increase the savings rate and the investment rate, they start to grow much more successfully than the other countries. That's it.
Yes, Vladimir, you are quite extensive, but I enjoy consuming your knowledge. But a quick response. This is my response. Vladimir, some argue that collectivism is suitable for a post-industrial era. So for instance, during the era of the Industrial Revolution and manufacturing, collectivistic traits are relevant. But when a society matures and becomes more disruptive, we ought to invest in a greater level of individualism. I had an interview with someone called Carl Frey, and this was his argument, and it is enunciated by other scholars that individualism is correlated with trust, venture capital formation, and innovation. And there is a worry that the collectivistic model of East Asian countries cannot allow them to truly become disruptive.
Well, I wouldn't say that you necessarily contradict me. I would agree with you with a very small addition to what you said. I would say that the human rights and individualism is a luxury that a society can afford at a certain level of development. And it shouldn't be, it shouldn't be introduced before you reach a certain level of development. So yes, in order to survive, the human societies need to adhere to a certain level of collectivism. But once the society develops, then you can introduce more and more individualism. It's a luxury and it's good and it's being enjoyed by everyone. But finally, when you encounter problems like pandemics or like depletion of resources or like the climate change today, you cannot do without collectivism. And this collectivism becomes the precondition for survival. So today, it seems like only collectivist countries were able to grow at 10% a year for the period of 40 years. It's China. Before that, it was Japan. You know, Japan was a developing country in 1950. In 1970, it became a developed country. Why? Because it was growing at 10% a year. What other country, Western country, was growing at 10% a year? No, we don't have that experience. Never before countries were growing at 10% a year in the course of several decades. This is a unique experience, and this seems to be an extremely successful, the most successful economic growth that we ever witnessed in the world history. And this comes with a collectivist model. So yes, it's good to guarantee certain human rights, and it's good not to impose limits on the reproductive rights, for instance. But when we have greater goals of the survival and development of humanity, I think it is reasonable to limit some rights. And it's a question of degree. It's a question of degree, finally, because in no society you can have absolute human rights. And in no society you can have freedom of press, total freedom of press. Yes, you cannot write about racial hatred. You cannot deny Holocaust. You cannot propagate terrorism. Yes, there are. You cannot shout in the crowded theater, fire, fire. Yes, it is a known fact, and of course, it's a matter of degree. To what degree you can limit the freedom of press and human rights? Human rights are limited in most of the societies. Before 18, you cannot vote, you cannot marry, you cannot drive a car, you cannot buy alcohol. And afterwards, there are quite a number of things that you cannot also do. You have some rights, but you cannot torture people, you cannot commit crimes. So yes, it's a matter of degree, how your rights are being restrained.
All right, Vladimir. Another counterpoint. Vincent Geloso, in a recent paper with his co-author, contends that countries investing in economic freedom, they have adjusted better to pandemics. And he was referring to pandemics over a period of time. And there are others who also posit that the spontaneous order, what they call the free market, is superior to the decentralized system. So what is your response to these free market advocates?
Well, the first claim is not really true. You just look at it is not very much discussed in the media, but the fact is that no country adjusted to pandemic better than China. The number of people in China that died from COVID is something like 70,000. I think, yes, several thousand or 70,000. But whatever the number is, I don't recall immediately. I think maybe just 17 maybe thousand. Whatever the number is, it is nothing as compared to 5 million people in the world. If you look at the United States, for instance, in the United States in 2020, as compared to 2019, life expectancy went down by 1.5 years. If you look at Russia, it went down by 1.8 years. This never happened after the post-war period. This never happened in the 20th century. Only during the wars in European countries, this life expectancy went down. But in the post-war period, in developed countries, life expectancy was always growing. Now, in China, it increased. Life expectancy actually increased. So the Chinese way to deal with the pandemics was the best in the world. It's not only the best in the world, it's the best in the world. Why? Because life expectancy increased, and not only it increased without the damage to the economy. In 2020, if you take G20 countries, out of these 20 countries, only 2 countries registered some growth of output for the year as a whole. In China, there was a decline in the first quarter of 2020, but then there was an increase because they dealt decisively with the pandemics and introduced these quarantines. And the economy recovered. So the Chinese economy grew by 2.6%, I think. This was one economy out of G20. The second economy was Turkey. I don't know what are exactly the reasons for the Turkish success, but the fact is that China did well in terms of the life sacrifices for COVID, the human loss, human costs, and in terms of economic costs. Chinese economy grew, Chinese life expectancy increased. This is the best combination that you can have. You can argue that in, say, United States, the emphasis was on freedoms, and that's why economy contracted more, contracted less than in European countries. In European countries, people were forced to, wear masks. There were lockdowns in European countries. In Germany, for instance, some of the shops were not working only for some period of time in 2020. Only the food shops and the drugstores were working, and the other shops were just closed, right? So there was a lockdown, and the restaurants and swimming pools, they were all closed. The Germany and European countries generally, they made the emphasis on saving lives at the expense of the economy. United States made the emphasis on the economy at the expense of human lives. But China won in both cases. China, there was no such a trade-off in China. So, and also, by the way, this is the case in Malaysia, in South Korea, in Japan. The number of deaths from COVID is very low per 1 million people, is very low as compared to other countries. Mortality rates increased in European countries by 10 to 20%. In the United States, 25%. In Russia, 25-30%. But in countries that did better than anybody else in terms of the increase in the death rates is China, Japan, South Korea, Malaysia, other ASEAN countries, and Australia, New Zealand, and Scandinavian countries. Scandinavian country, by the way, Sweden, which did not impose any restrictions, also did pretty well. And it remains to be analyzed what is the reason for that. But, in Sweden and Denmark, in Iceland, in Norway, the human costs were very low. So the first claim is not really true, right? So, countries that bet on collectivist values, they did better than countries that try to guarantee individual rights and try to say that this is a basic human right, whether you wear a mask or you don't wear a mask. And the second claim, can you remind me, you said that those countries are overall, the second claim was overall, these countries, they grow better in the long term. Countries with individual freedoms, yes, and with free entrepreneurship and democracies, they grow better in the long term. This was the second claim. Was it the case?
Yeah, the second claim was okay. So I assume that you were referring to the spontaneous order versus the managed order, but there were two claims. One, the economic freedom claim, and that was thoroughly analyzed in your speech. And the other claim is spontaneous orders versus managed orders.
Yes, spontaneous order versus managed order is basically the market versus the plan, right?
Yes.
If we put it in. I come from the country which had a centrally planned economy. And at the time when the country was switching to a market system, I was writing articles in favor of the market system. Yes, so I thought that centrally planned economy doesn't work and it's inefficient, right? And I was pushing very heavily, yes, to 30 years ago, to move to the market economy, because I thought that self-regulation mechanisms are important in every complicated system, such as an economy. Without this self-regulation, the system cannot really function. And I still adhere to this view. But the question is, to what extent you regulate the market? They say that the markets are good servants, but bad masters. If you allow the market to regulate everything, this is not something that is going to propel you quickly to the rank of the developed countries. Just think about the Latin American countries. Liberalization. There is a lot of liberalization in Latin American countries. There was a lot of liberalization in African countries. They usually say, why China grows so fast? Well, because Deng Xiaoping carried out reforms, liberalization reforms, introduced the market system, and China started to grow fast. The question is why Latin America doesn't grow that fast. Yes, it is also liberalized. After the debt crisis of the beginning of 1980s, there were some liberalization reforms in Latin America. Actually, the Washington Consensus emerged exactly at that time as the consensus between World Bank and the International Monetary Fund, which were both located in Washington, about the need to liberalize, to privatize, to stabilize, to open up the economy, right? This was a consensus. But somehow it led not to economic growth, it led to the lost decade in Latin America, and then there were 2 lost decades in Africa, Sub-Saharan Africa, when they did the same liberalization. The way to look at it is to, Danny Roderick has a good article, which is called Growth Diagnostics. And basically, maybe he doesn't say it, but this is my interpretation of the paper. I would say that for economic growth, you need quite a number of things. It is like a good chef who is cooking the culinary masterpiece. There should be all the ingredients in the appropriate amount. There should be pepper and cinnamon and basil and garlic, everything. If there would be a little bit more pepper, then there wouldn't be a masterpiece, right? There would be no spark, there would be no chemistry, and there would be no culinary masterpiece. This is not the chef d'oeuvre, as they say. So the same goes for the economy. If you need to manufacture economic growth, to engineer economic growth, you need quite a number of ingredients. In the agrarian countries, you need the even distribution of land, agrarian reforms. You need strong institutions, so the government can order something and this order is carried out. You need also good orders, good industrial policy and good macroeconomic policy. You also need some market liberalization, so there are some automatic mechanisms. And all these ingredients are supposed to be in the right proportion. So in China, I can say that all the ingredients were in the right proportion in 1979, thanks to Mao Zedong policy. There was a skilled labor force. The population was educated. There were strong institutions. The Communist Party created the vertical of power, which was stronger than the one that was created by the Chinese emperors, by the first Chinese emperor, Qin Shi Huangdi. There was also the infrastructure, which was built by the communists. There was also agrarian reform, which was carried out by the communists. What was lacking was the market, liberalization. But this is the easiest component. Why? Because you don't create, to create the market, you just abolish regulations. You don't need to create anything. Institutions are there, skilled labor force is there, infrastructure is there, macroeconomic policy is there, good macroeconomic policy. So you just add a little bit of liberalization and there is a spark, there is a chemistry, and economic growth starts. And in Africa, you do liberalization without infrastructure, without educated labor force, without strong institutions, without agrarian force, and nothing happens. Yes, and the economy goes down, right? So yes, there is a need for some liberalization, but in addition to liberalization, you need quite a bit of ingredients. And among these ingredients, the most difficult one is, of course, the strong institutions. I would also say that, if you have strong institutions, you are much more likely to proceed with a good macroeconomic policy and industrial policy. In Latin America, it was import substitution. In East Asia, it was export orientation. And it turned out that export orientation is much more efficient for economic development than import substitution, at least at this stage of development. And why it is the case that in Latin America, they stayed with import substitution? It is not because they didn't know. It is not a question of engineering and knowledge. It is because the decision-making process is such that it is influenced by the interest groups, by the powerful interest groups, by the powerful lobbies. So in Latin America, there were powerful lobbies that prevented the government to adopt good macroeconomic policy and good industrial policy. This is called macroeconomics of populism. And Jeffrey Sachs and Rudiger Dornbusch wrote quite a bit about it. Latin American macroeconomics of populism. And in China, the government was strong enough to withstand the pressure of all the interest groups. if there were interest groups, because basically the vertical of power that existed in China and created by Mao Zedong was such that the interest groups were very weak. Yeah, there was a consensus from top to bottom. They created the consensus from top to bottom, the most precious heritage of the communist system, and this is what we call strong institutions. Well, I guess this is the story in a nutshell.
Vladimir, few people can acutely rebut arguments in favor of the free market and defend cogent arguments favoring the free market at the same time.
Well,
I am impressed. I am floored.
Well, I hope you would be persuaded. Yes, I think this is very natural what I said. So, if you think that it makes sense, I'm very happy.
All right, back to China. Vladimir, it is being said in the media that Xi Jinping is unfriendly to tech companies. So this is my question. What is the optimal level of statism for an economy to flourish? And should Xi Jinping scale back on some statist policies?
Well, I cannot say I'm really the expert on tech companies and how they're
it's not about
regulated.
I'm not really asking you to comment on the regulation of tech companies. What I'm asking is this: should Xi Jinping scale back some of these regulations and allow more markets to flourish?
I would say that in all the countries, we're coming to the point that tech companies are supposed to be regulated, and in the United States as well. These social media networks, they became so powerful that it is difficult to imagine that in future they're not going to be regulated because they threaten the social peace in the society. For instance, the companies like Facebook, they may there are laws that prohibit, for instance, the advocacy of terrorism, of racial hatred, of gender inequality and things like that, right? But these laws, it's difficult to apply them to the social media. Why? Because the social media, they are based on writings of individuals. Yes, if you have a newspaper, then you can hold the newspaper responsible for advocating terrorism. But if this is social media and they are unregulated, you even don't know who is writing. And in order to know who is writing, you are supposed to regulate it somehow. So yes, this is a limitation of personal freedom, definitely, right? But you have to weigh the costs and benefits. This is where we come to the point when the technological developments threaten our previous understandings and standards of personal freedom. Pretty much like with the depletion of resources and with the income inequalities that are growing today in the world and with the climate change. It was Jared Diamond, I'm sure you know.
Yes, Jared Diamond.
He recently had a piece saying that it is good that we have pandemics now because it's a general rehearsal of the problems we're going to have in the future. He said, if all people in the world will catch COVID, the death rate is only 2%, no more than 2%. So it's only so many millions that will die, only, yes, in quotation marks. But the humanity will survive. However, there are more serious problems that threaten to put an end to humanity, like the climate change or depletion of resources or the income inequalities. Well, say that this social media and the information giants, they spread technological information, this technology of the information is another problem. And once again, I'm not a specialist here, but it seems like it is another problem which is begging for regulation. Because if it is not regulated, it may result in hatred and in polarization of the society, which may pose the threat to the society because it may breed wars and social conflicts. This is a general approach. I know this is not much. I don't know much about Xi Jinping, but it seems like the regulation that it was initially, it was with the Jack Ma. It was not with the media companies. It was with the Alibaba, right? That he took some measures against those companies. Well, That's a general principle. You know, very big companies are supposed to be regulated. That's why? Because these are the institutions. They become the institutions and they replace the state institutions. Big companies, what is the difference? Big companies operate because of the profit motive, and they try to do good for themselves and not for the society. And it is the state that cares about the whole society, or should care about the whole society. By the way, Friedrich Engels, you know, the guy who wrote together with Karl Marx, he once said that the goal of the state is to save the bourgeoisie from itself, meaning the goal of the state is committee of the bourgeoisie, which is intended to save the bourgeoisie from itself, meaning from its own greed. Right? So I think this is the general principle. So I have a lot of sympathy to the regulations.
Well, arguably, Vladimir, the market is dynamic. And because the market is always changing, then bigger companies can be created to alter the system completely. And as such, earlier regulations could become redundant. So what is the cost of some of these regulations? Because in a rapidly growing market, we're regulating tech companies or other companies to solve pertinent issues that are germane to this environment. But within the next 5 to 10 years, when the environment is completely different, the previous regulations, do they now become an expense?
It is possible, yes. It is definitely the case, and even more so, you know, there may be self-regulation. If you think about economic history, there was a self-regulation in the guilds of artisans. Pardon?
There was even self-regulation in finance in Britain for many years.
In finance, yeah, not only in finance, but you know, in medieval times. If we go back to medieval times, there was a self-regulation in guilds. And you know, the community, agricultural community, was also a self-regulation mechanism. It regulated itself. It looked after its own members, so they don't become very poor, and they have something to eat, and they don't die. And when Elizabeth I, 16th century Britain, introduced, when these laws about enclosure were introduced, there was a whole amount of resistance to the laws and the other laws which called to limit the process of enclosure, because they emerged vagabonds and the population declined. There was a population decline. So there were quite a number of laws to slow down the process of enclosure. Now later, the artisans in the free cities like, you know, Venice and Geneva and Hanseatic cities, these artisans were united into guilds, and these guilds were looking after the standards of production, and also they were looking after the competition between the members of the guild. So they were limiting this competition to a certain extent. It was not the state, it was the like you said, the finance industry, right? There are you know, associations, or like in you know, education, there are universities or association of business schools which give the licenses, which certify the business schools, right? That can, they give a certificate saying that this school is up to the standard and it can provide appropriate services. Why? Because there is an asymmetry of information. People cannot figure out whether it's a good business school or bad business school, yes? And it depends very much on advertisement. And if the advertisement is good, you can sell, you know, everything to the public, right? If you have a lot of money. So it is important to introduce some kind of expertise into the process, and this can be done by self-regulation. And yes, I would agree also that in addition to self-regulation, it may be that certain regulations may become redundant in the course of economic development. Yes, once there is self-regulation, the government regulations become redundant. So yes, it can be the case.
So maybe this is what we should actually be maybe this is what we should actually be recommending, the self-regulation of the tech sector. And usually regulations can be subject to regulatory capture. Big companies often prefer regulation because they impede business formation and competition. So maybe what is needed is for these the tech companies to come together and create the relevant regulations. After all, they're in the market space and as such would know more than government bureaucrats.
It is a good idea if they comply. if they do the self-regulation. But if they don't, the state is supposed to step in and to tell them either to do self-regulation or to regulate the process itself. So if the banks cannot agree on the punishment for not returning the deposits when a bank goes bankrupt, right? There is a Federal Deposit Insurance Corporation in the United States, right? So then it should be the government company that is created, right? So if there is no self-regulation, the government is supposed to create this regulation and not to abolish it until there is a self-regulation.
Now, Vladimir, back to the earlier question. What is the optimal level of statism? I've never seen research on this topic. I've seen research on the optimal level of government spending and state ownership, but statism as a philosophy, I've not seen this type of research.
Well, let me start with the minor question. As you said, the state expenditure, right, and state property. There is a paper by Danny Roderick which looks at the share of government revenues and expenditure in GDP. And it turns out that it depends on two crucial indicators. The first one is GDP per capita. The more developed the country, the bigger is the state as compared to the rest of the economy, to the GDP, right? So the American government before the Civil War, before 1860s, was something like 2% of GDP. The federal government in the United States was 2% of GDP. After the Civil War, 4% of GDP. And today it is, 15 to 20% of GDP, and together with the states and local authorities, it's 35% of GDP, right? So it increased dramatically, and this is what happens in other countries. And this is not the biggest. In Scandinavian countries, the government finances is something like over 50% of GDP, right? Now, the second indicator is the size of the country. In different groups of countries, in developing countries and developed countries, the bigger is the size, the smaller is the government. For instance, in China, the government is relatively smaller than in Luxembourg. Well, Luxembourg has a different level of development, but compare China to, I don't know, Honduras, right? So in China, the government will be smaller than in Honduras just because of the size of the country. And probably there are economies of scale because, you need only one embassy. China, I don't know the population of Honduras, but probably it's several million people. So, you multiply it by several hundred. So countries like Honduras need several hundred embassies. If you compare it with China, and China needs only one, right? In every country. And also, one currency, for instance, of course, for one currency is good for economic development. And so, yes, there is this share of the government is changing. And I think it is not only the share of the government revenues and expenditure in GDP and the state property that is growing, right? Generally, it is growing in all the countries with all the variations that we have, with all the, it generally goes up with the wars, and in peacetime it goes down. But overall, if you look at several hundred years, it is growing. The share of the government is growing. And why? My explanation, you are interested in philosophical explanation. I should say that philosophy is not exactly my area. I'm mostly in economics and economic history, but of course we all have philosophical ideas, and the older you get, the more philosophical ideas you are interested in. So the general philosophical idea is this one. It is kind of shameful for the human society to rely always on the self-regulation mechanisms. Why? Because self-regulation, maybe sometimes it's not so good. It should be, if human mind is so powerful, it can regulate everything. We shouldn't regulate it before we know how to do it, before we can prove that our regulation is better than self-regulation. This is the general principle. As I argued in the former Soviet Union, which was establishing all the prices. In the former Soviet Union and the centrally planned system, there was a central pricing committee, and it established the prices for all the goods. And it claimed it knows better than the market what prices should be established. So my argument was, if you cannot predict the market prices, if you cannot tell me how the price for oil is going to change in the world market tomorrow, then you don't understand it. And if you don't understand it, you cannot claim that you know better what price should be appointed for that particular good. So unless you know better what to do, you shouldn't really do it. You should rely on self-regulation mechanisms. But because we're getting smarter and smarter, because there is a progress of science, because now we're conquering space and we're able to decipher the human genome, we are able also to make sense of the market. The market is not always perfect. This was proven times and again by various researchers. From the discussion of Friedrich Hayek and Ludwig von Mises with Oscar Lange, for instance, right? What the market can do and what the market cannot do. The market cannot do a lot of things. The market does not ensure social justice. The market is pretty bad in long-term projects. The market establishes equilibrium only through disequilibrium. This is the mechanism, only through disequilibrium. So there are losses in the market. The losses, by definition, we're supposed to do better than that. And once we can do better than that, we're supposed to plan our future.
All right.
If the human being is the Tsar of the development, then we can probably control our society as well.
All right. And Vladimir, we've been speaking for about 1 hour. I'm wrapping up, but this is my last point. Maybe markets work by failing. When markets fail, we learn what to do and what we should not do. And in the long term, Vladimir, maybe it's better to allow the market to fail because it will eventually reap insight than to rely on government planners who don't have access to the relevant information. But this is just my view. And as I said, we're wrapping up, but I could speak to you for the entire day.
Well, thank you. I would agree. Just one phrase. There are cases of market failure and government failure.
All right.
And economists like to speculate which is better. So yes, in every particular case, the answer is different.
All right. But it was a pleasure speaking to you, Vladimir. Bye.
Well, it's a pleasure to talk with you. Thank you for your interest. Bye.
All right. Bye.